All right, guys, what is up, traders? Today is July 28th. It's 1:25 in the afternoon. And guys, today, what I want to show you and what I want to talk to you about is we are just coming off about 23 and a half hours ago. The Fed came out and they kept the consensus that they were going to raise the rate by 75 basis points. And so what I want to talk to you about today is that while we're seeing these really big gains, I think that, and the NASDAQ was up something like 4% yesterday and gave back a little bit of those gains overnight. Let me draw out here. Gave back a little bit of those gains overnight before we continue that rally up to yesterday's highs. And I don't really know what's going to happen with the indices right now. I'm not sure where they're going to go. It looks a little bit strong, particularly on the NASDAQ. In that downtrend, it looks like we've retraced about 100% since that previous impulse downwards. So pretty critical area here around 13,000 on the NASDAQ. And as I look at the S&P, 4,200 looks like a very critical area of whether or not that downtrend is going to continue on or not. But what I want to show you guys is something that I use. I look at this chart every single day. It is the US dollar, but I don't use it necessarily to trade. A lot of times I will look at the US dollar as confluence or as an idea of where historically metals and currencies and where I can get an idea of that. But over the course of time, it shifts. And so I'm going to tell you what I look at to help me understand what those shifts are. And so what I've got here is a completely free resource. It is mrci.com/special/coral, CORREL.php. So mrci.com/special/coral/php. It's a correlation chart, guys, of the of all of the assets here that we trade, basically. And so you guys remember growing up and looking at correlation charts. They range from negative 100 to positive 100. And if you're correlated with yourself, obviously it's blank, right? So you see the blanks all the way down from the top left to the bottom right, where orange juice is still orange juice, even if it's compared against itself. So, but what I want to point out here is for years, decades, we have looked at the dollar to be the opposite of metals and some currencies and things of that nature. But that's not always true. And so I love MRCI to tell me what's been going on for the last 180 trading days. And so what you can see here is we have all these assets at the top, all these assets on the side. And when I look at the US dollar, I can see that it's negatively correlated with the euro dollar, the Swiss franc, the euro, and the Japanese yen above 95%. And what that means is that if the dollar is going up, there's a 94% chance that these four assets will go down when the dollar goes up, right? 100% chance if the euro right now is going down in the last 180 days. But as we scroll through and look at something like the Canadian dollar or something like the Australian dollar, those are only a 59% chance or 62% chance that they move inversely. But what's more significant to me on looking at this chart, considering that when I'm looking at my Thinkorswim platform and I'm looking at the dollar, for the course of my trading career, I have looked at the dollar and gold and metals to use as a kind of a backdrop or confluence to a specific trade that I wanted to take. But check this out. Here is gold, platinum, and silver, and copper, okay? Gold, platinum, silver, and copper are up here, and the dollar is right here. So if I scroll over to gold, platinum, silver, and copper, I can see that over the last 180 trading days, that my US dollar, that indicator that I love, to help me add to confluence, not confusion, but confluence to metal trades, gold and the dollar are only at a negative 19. That's rare. And so what you typically see is you see the dollar go up, you see gold go down. But over the last 180 trading days, that has not been the case. And so I use this to help me understand what is transforming inside of markets. And guys, you can go everything from, natural gas to gasoline to heating oil to Brent crude oil, and how everything here is related. So if you're I look at percent change charts a lot, especially when I'm looking at the oils and the indices. But if you're looking at something to correlate it against, this is a really good chart to check out. It even shows you that the 30-year is negatively correlated against things like gasoline, which could be added as confluence. So if I wanted to get long gasoline right now, I would absolutely want 30-year to be running into a supply zone. Because if the 30-year supply zone works and it goes down, gasoline is most likely to go up, right? It's a high negative correlation there. So guys, with today's teachable moment, I look at MRCI's MRCI.com/special/coral every single day to see how this changes, because trust me, gold has not always been negative 19 with the US dollar. And so that confluence goes away. And so you look at these, and thankfully MRCI gives all this information away for free. The greens, you can see anything over 90%. The reds, anything lower than negative 90. Those can be added to your trading strategy if, for instance, the NASDAQ runs into a supply zone and heating oil runs into a demand zone. They are likely to flip-flop and go in your favor. If both of them run that way, there's a 92% chance that if heating oil goes up, the NASDAQ's going to go down. And that is really, really interesting as a trader to see these correlations. Guys, MRCI has provided this for more than 13 years. And I have looked at it a lot. It's a bookmark. You can see that on my desktop. It is a bookmark on my my browser right now that I look at all the time. So, guys, you can use this in your trading to see if, for instance, so let's go ahead and go back out. Let's find a highly correlated one. Let's do the British pound and the Swiss franc. So if we look at the British pound right now, and let's just see if we can find anything really quick while I'm doing this. And let's just say we're calling this like an area of support, right? So the British pound is going to be running in that same area as this, as the Swissy is. Whoops. And that's going to be about right here, right? So if they're both going to move up, they're both going to be moving up from about this area at a 92% chance. But if they both fall through, they're most likely to fall through. If we look at the Swiss franc and the dollar, so we're on the Swiss franc right now. If the Swiss franc is going to fall, that would mean that the dollar is most likely to rally. And so what we can do is we can look at hour or 4 hour charts here to say, okay, I see a drop-based drop here nicely on the dollar, and I can run into this, set me an alert here at or above, and if price runs into here on the dollar, perhaps I would want to get long the either the euro dollar, the Swiss franc, the euro, or the Japanese yen, right? or the Australian dollar. Negative 94, negative 92, negative 100, negative 97, negative 98. So if we come up here and we're below 60 on the RSI and we have all of our other stacking the odds studies going with us, and we think that the dollar is going to fall from this 107 area, it can make sense to be long in other positions. And guys, that's how I use this correlation chart, and you should add it in your trading as well. It is a free resource, and this is just one of the things that we use here at Trading Price. So guys, with that, take it easy, and I hope you have a great day. All right.